So, is Palantir finally a buy after the third quarter earnings we saw yesterday? That's a question in everybody's mind. Now look, let's dive deep into the Q3 results and let's talk about it. Now, first of all, we know one thing. Palantir reported revenues of $478 million, which slightly beat estimates by a couple $1,000,000. So I would say it was technically a beat, but realistically, this was on par with expectations. I don't think it's actually a beat. Nevertheless, it's still quite impressive given the fact that just 2 years ago, in Q3 of 2020, Palantir did $290 million. That's a 64% increase in just 2 years. Now, the issue that investors have with this number, that it also has a flip side. This means that we only saw 21.6% growth rate in revenues from 2021 until now. But given what happened in the past year with, the tail end of the pandemic, the worst inflation in 40 years, the war in Ukraine, a recession around the corner, I'm kind of willing to give them the benefit of the doubt here, Not the best economic conditions. So 21.6%, although not something to write home about for a company like Palantir, it's good enough to keep the needle moving, at least in my book. Now, moving on. We found out that the company reaffirmed its revenue guidance for the full year of 2022 for $1.9 billion, which means that if they hold true to that, we're going to have the first $500 million quarter in Palantir's history, which is absolutely massive. I'm excited to see that happen. It's a nice big milestone, which is something I spoke about yesterday in my video. But beyond the historic milestone, the growth rate of revenues is concerning if you look at the previous years, if you look at the first half of 2022. Look, Palantir is aiming for an annual growth rate of about 23.3% for the rest of this year. Now, if you look at the first 6 months of this year compared to the previous year, we have 28% revenue growth. Now, we just had a 22% quarter right now. If you calculate 28%, 22%, and a 23.3% rate for the rest of the year, it means that Q4 revenue growth is going to be 16%. So I cannot lie. There's definitely a slowdown in revenue growth for the rest of this year. It's not something we're going to put under the rug and completely ignore. Now, looking at it a little bit deeper, we can see the root cause of this is coming from the commercial business of all places, not the government business. This category is primarily US dominated. You all know this as a Palantir investor, I'm assuming at this point, right? But we did see a deceleration growth from 120% in the previous quarter to just 53% growth in Q3. Just 53%. Everything is in context, but if you went from 120 to 53, there's definitely a problem. We can't ignore it. Now, I'm assuming personally that this has something to do with the weak macroeconomic conditions. We saw similar results from Google, from Amazon. Other companies are suffering from the same kind of B2B slumber. There's a lot of problems right now. People are basically slashing budgets. Spending is reduced. Everybody is fearful. Enterprise software sector is actually in the shelter, waiting for the recession to come. Everybody is afraid. Nobody wants to spend any money. You know what they say, right? When the macroeconomic condition sneezes, everybody gets wet. Palantir is not excluded from that. They're a regular company like everybody else, and they also feel the macroeconomic pain. Now, here's the problem. I'd love to get more clarity on this from the management, which we haven't yet, but hold on a second. Maybe we will in the future, maybe we won't, I don't know. But here's the thing. I'd like to take a look at this whole story from a kind of an annual basis. I think looking at it on a quarter by quarter in an isolated fashion is like, being an ant on a football pitch. Every piece of grass looks like a ginormous building. When you're up at the bleachers, it looks completely different. So let's go to the bleachers for a second, right? By the time 2022 is over and done, right, Palantir will achieve a 23.3% revenue growth. Now, according to their guidance. Now, that shows me that Palantir is learning how to play football in the rain and in the snow, in the elements. They've improved their go-to-market strategy. We know that. Foundry is selling better than ever. Look at the customer count growth. You can see that. The idea is to get your foot through the door and to trust the sticky products and your net dollar retention to increase the actual spend over the years. And with that system, it takes time to actually see the revenues pile in. That's just normal. It's kind of a loss-leading strategy. Now, for me, the test is actually down the road. For a multitude of reasons. Number one, I want to see that strategy actually pan out. Can we see these customers who actually just basically got through the door actually increase their net dollar spend? And also, I want to see what's going on with the acceleration of the growth. As long as Q1 of 2023 is not going to continue in this decelerated growth trend, I'll be fine. I'll take the 23.3% growth this year and I'll just move on. No problem. That in my mind is going to be the big test. Whether this decelerated trend continues to the next quarter, basically the first quarter of next year as well. Now, about that, we know the Fed is tightening the monetary policy. The monetary conditions are going tighter and tighter. They're basically putting us in a collision course with some bad times in 2023. We know that. However, operationally speaking, if you ignore the reaction of the market, this company can weather the storm pretty darn good. I mean, zero debt, $2.4 billion in cash, including an emergency $950 million credit line they secured just in this quarter, just in case. By the way, you can actually look it up. It says that in the report. Given the fact it's not burning through any cash flow, it's actually cash flow positive, I feel very relaxed going into this horrible year as a Palantir shareholder. Now, while the growth in earnings is trending down over the past 2 years, Palantir's customer count, as I mentioned earlier, is actually very impressive. It's actually trending upwards. Over the past year, the company grew its customer count by 66% in a year, in a bad year, while maintaining about 20% revenue growth and a positive operating free cash flow. I mean, that's not bad. But Tom, what about stock-based compensation? What about insider selling? Well, first of all, beyond the fact that Alex Karp did not sell a single Palantir share in over a year, I have to admit that using stock-based compensation, paying employees with stocks, is one of the reasons Palantir is generating all that positive cash flow. True. However, look at the number, guys. Even those of you who don't like Palantir, go and check me on this. From 2020 to 2021, the share count of Palantir more than doubled, as it went from 900 million shares to 1.9 billion shares. But things have changed and things are changing. Over the past year, Palantir's share count only increased by 5.5% from 1.95 billion to 2 billion shares. That's it. Now, it's a high growth rate for the share count, but for a high growth company, which is giving you 20% a year revenue growth, 5% dilution is on par with the industry standards, and it's not unusual. So here's my bottom line here. The numbers this quarter were good. Much better than I personally expected, given how bad Q2 was. So maybe I'm a victim of my own low expectations. Perhaps. But I think it's partially because of the macroeconomic environment. I think there's a lot going on around Palantir, which is not strictly about the company itself. There are plenty of reasons to be concerned about. Deceleration of the revenue mainly. But I'm optimistic since I see some impressive customer growth, which I know, combined with 120% net dollar retention Palantir has, is going to convert to increased revenues over the years, especially in the US. And speaking about the US momentum is pretty darn amazing. I mean, government contracts have provided an anchor for the company, even in bad times. 130% growth in commercial customers in the US, very impressive. Therefore, bottom line, my long-term thesis as a Palantir investor is unchanged. And given the lower share price and my unchanged thesis, I will be increasing my position in the next few days. So I thought you should know this. As always, thank you for watching. If you want to see the recap of the actual numbers, I've done it yesterday. I'm going to put the video right here. Right here. Go check it out right now. Full numbers recap. I'll see you there in just a minute.